Today is Monday, March 25th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services, Archer Financial Services, or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, Alan Bush, ADM Investor Services Senior Financial Economist, and special guest Mark Soderberg, Grain Risk Management Specialist with Archer Financial Services. Steve, let's start with the grain markets this morning. Corn has rallied recently. Why is that, and what's next for the grain markets?
I think the first thing was that the market saw China come in and buy a small quantity of U.S. corn and pork, and I think that rallied the markets. I think the funds are record short corn, and it makes it vulnerable for a rally. The weather is not conducive right now for two things. Number one, logistics and moving rail cars, especially at some of the ethanol plants, and also getting the corn planted on an early time basis. Still too early to worry about it, but if the weather continues to be wet, the corn market could see a short covering rally. And then I think finally the farmer's just not selling. I mean, he doesn't have any really need right now to lock in a lot of selling here until he sees more about China and sees more about the weather.
Steve, I know you have weather contacts. What are the weather guys looking at for, say, the next 30 days?
Two things. I think they feel that the flooding will continue at least through April 10th, and that the 30-day outlook is for above normal rains for most of the Midwest.
And what about the U.S.-China trade negotiations? Anything new to speak of in regard to that?
Well, March 28th and 29th, the U.S. trade representatives will be in China to try to hammer out a deal. Then the Vice Premier of China comes to the United States April 3rd, so they're hoping to get something concrete done and be able to sign something in April. Now, market was a little disappointed that it's not done in March. There are some very key points, especially with China, as far as language is concerned and enforcement of the rules are concerned, but they hope to sign something in April.
Mark, can you comment a little bit about the soybean markets and then perhaps talk a bit about what farmers should be considering from a marketing standpoint?
Yeah, soybeans, as we, Steve had alluded to, has been really kind of in a sideways pattern here for months as the U.S. Trade talks with China have kind of drug on. Exports have been nowhere near what they need to be to reach the USDA projections pre-tariff. Really, we're just kind of grinding sideways right now, hoping that something comes of these trade negotiations later this month and into next month. Despite all that, despite the record stocks, it seems like soybean prices have actually held in there fairly well compared to what you would expect given the record supplies. South America is really in the final stages of harvesting their crops. They had good crops, not record crops, as there was some concern kind of in the January-February timeframe, which reduced yields a little bit. All in all, however, I'm a little bit cautious that there's much upside potential right now. I think there's just still a lot of downside risk. Farmers are still holding a lot of soybeans from last year's crops, and they will eventually have to come to the market. We just need to see a trade deal done soon, which hopefully will relieve some of these stocks with this demand back to China. So, what we're doing is really encouraging our farmers to have a plan in place. Know your cost of production, because right now margins are thin, if existent at all. And to have a plan, be ready to act on it when the market presents opportunities to market your crops at favorable levels.
Yeah, so despite there's the crops, 2019 crop isn't even in the ground yet, farmers really should be thinking about a plan for marketing their grains, maybe resting some orders above the market?
Absolutely. I would guess our typical client, farmer customer for 2019 has already got about 10 to 20% of their crop sold, and I would really advise these people to market a little bit more in the 960, 975, 980 area. Again, we just that should enable most farmers to achieve a profit basis their costs, and it's very important to know this ahead of time. We just don't know when these opportunities will come.
How much 2018 bean and corn crops are there still out there in storage unsold?
Quite a bit. In fact, I think a lot of farmers have been storing crops in anticipation of some sort of conclusion to this trade dispute. and there's just still a lot of it out there. We saw in the, we'll get another update on this on Friday with the March 1st stocks report, which will break down what's on farm and what's in commercial hands. But at the end of last year, on December 1st, there was a record amount of stocks, at least soybean stocks, on hand in the hands of farmers.
So if we do get a rally, let's say we settle the Chinese situation, we get a rally going in the grains, farmers start to sell both their 2018 crop and maybe some of their 2019 crop. Doesn't that also put pressure on the market?
Yeah, it could. It potentially could. That's why we're recommending our customers either get some more sales in place and have targets above the market, or if you're more of an option person, look to put floors in the marketplace by buying a put. Something, just give you the comfort to sleep at night knowing if we do see that type of pressure, you're covered.
Let me flip this around a little bit. What about the end user of the grain market? Should they be locking in these prices down here really as far out as they can?
I think so. In corn in particular, we see a little bit better upside potential there. As Steve mentioned, the Commitment of Traders report did show the speculative traders have had a record short position now for the last 2 reports. And then given the weather uncertainty, what's going on right now in the western corn belt with the flooding and all this, it just doesn't bode well for good plantings, particularly early. We'll get the acreage estimates from the USDA on Friday as well. They're expecting a 2 to 3 million acre increase in corn. I'm hard-pressed to think we're going to get that given the new price relationships between new crop D's corn and November soybeans. So I think that's a wise idea. There's just too much uncertainty, too much upside risk for an end user to not have something in place to cover their costs if things rally.
Thank you. Alan, got a very broad question for you. What is your outlook for the global economy?
Well, it seems very clear that the global economy is weakening, but it also seems clear that the U.S. economy is likely to hold up better than elsewhere in the world. In fact, the Eurozone economy is near recession. The Chinese economy seems to be not doing well either, but the U.S. economy, I think, relatively speaking, will do better. In fact, GDP this year is likely to be 2%, showing 2% increase, although that is down from 2.9% growth last year. But overall, the U.S. economy will perform better than elsewhere in the world.
Alan, what can you tell the traders about the gold and silver markets right now?
Now, the gold and silver have put in rather good performances lately, especially the gold. In fact, just today we are at a 4-week high in the gold market. The next objective I have is 1330 to 1332. So inflation, not much of a problem right now, but I think traders are correctly anticipating that easier credit from many of the world's central banks will ultimately result in inflationary pressures. I think traders are looking ahead to that and are buying the precious metals now.
Finally, on last week, the S&P 500 advanced within 3.5% from its all-time highs,
right,
but then sold off late in the week, pretty hard on Friday, actually.
Exactly. Yep.
Has your outlook for the stock index futures changed, or are you still looking for higher prices?
No, it has not changed, and in fact, I find it rather interesting that we come very close to these highs in the S&P, and yet 2 days of lower prices, and everyone has bearish articles. The commentary is very negative. And I think what will happen this time is the same thing that happened over every other time we saw hard breaks over the last 10 years or so. The still relatively low interest rate markets, interest rates globally, will come to the aid of stock index futures. But now we have central banks moving toward easier credit conditions, so that will ultimately be what saves this market again. So we are not in the beginning of any new bear market for stock index futures.
Thank you all. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services, Archer Financial Services, or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.